London was absolutely surgical this morning. Clean setups. Let's break it down and set the tone for the week. It's Jimmy Trades here. Welcome back to the channel. Happy Monday. Hope you all had a fantastic weekend. Drop a comment. Let me know how your weekend was. I hung out with family, did some work around the house. The young fella had a motorbike lesson. It was a great weekend overall. Alrighty, let's start here on the calendar. Remember to subscribe to the channel, guys, and please give the video a like and share the channel far and wide. So, quiet week off the back of a very heavy news week last week. We just have high impact news on Tuesday and then high impact news on Thursday. Other than that, pretty quiet week. So we just look for those A+ setups and we wait for that liquidity injection around that market open. Will give us the best opportunity for a clean trade. Alrighty. Remember, you can grab your Tradeify evals for 35% off with code JimmyTrades, and Apex 80% off with code Jimmy. Looking here at the weekly on NQ, and we can see we've got a perfect example here of the market stepping up, just taking its time, just nice stepping up, and then boom, elevator down. Perfect example of that just played out with this move through Thursday and Friday. Thursday gave us insight to order flow. We had this candle closure here back inside the range of Wednesday, and in fact closed below the open there as well. Then Friday, just dumpy dump. All right, and today we have opened up and we've moved higher. Now, when we drop down to the 4-hour, we'll see some potential zones that we can target. At the moment, we can see that price has come down. I've marked out this dealing range from this low to this high, and we can see that we do have, if we go to the weekly, you can see we have this weekly gap down here. Now, I'm anticipating that we'll likely see price expand lower, at least for the beginning of the week. We can see price at the moment is pushing up. Now, if we respect this 50% level of last week's equilibrium, that box here, that is aligned. This equilibrium is aligned with this box, and that box is a 4-hour bearish FVG. So I'm anticipating price to draw up to this level before moving back down. If we get a closure above this equilibrium, well, that ID is invalidated and we'll likely continue to see price move higher. So back down here on the daily, and we do have, if you look at this, we've got some bullish FVGs down here in the discounted range, and you can see where price did get a bounce here right off this order block, which is perfectly aligned with this candle that came out of this bullish FVG. So we can see that we swept that. So this is a good level that we have held here. Will that continue? We will see. But I like the idea of looking for that equilibrium of the weekly or the daily, and we'll see how price moves from there. Now let's drop down to the 15-minute. I'm just going to clear that. I'll just clear some of those. We don't need too much. Now, London, just want to have a look at London. So we had 4-hour gap up here, and we have this other one. That's the one that aligns with that weekly equilibrium. Okay. Also aligns with this daily manipulation. So it'd be interesting to see if price does reach this height, how price reacts there. Okay. If we trade up into that level. Okay. At the moment, we've traded up into this 4-hour bearish FEG. And if we have a look back down to the 15-minute, that was a great draw for the London session. So we had SMT off the low here. Okay. SMT here with ES. And if we drop down to the 1 minute, there's a beautiful 1 minute trade straight off of that. And we had this 15-minute, this box here is a 15-minute volume imbalance. And then we respected that. We had the SMT at the low, and then we got this lovely inversion here. So price would have closed through here. You take a market order, or you could have limit ordered into this one. You would have got a fill, and then you can just target out these highs here. Okay. These equal highs would have been your target, and just clean trade from there. Now you could have kept a trail on, and you would have had a nice 6R, potentially more if your trail was managed, really well, and it didn't get pulled on any of these pullbacks. But there's a good chance you might have got stopped out, up here somewhere. So great trade. So that was 1 minute, but then we had a beautiful 15-minute as well. We can see that here. We had these opposing candles, and price closed above this high here, the candle body high. Now, when that closed above, you could look to put a limit order at that level. Price came down, wicked into it, virtually zero drawdown, and again targeting that bearish FEG. That was our draw, and you would have got a lovely 2R out of that. 60-point trade during London. How good. That is also a bullish breaker here. So you could have played this as a unicorn trade. This would have been the breaker. You have a small bullish FEG right in here. So you get that displacement aligned with the breaker, and exactly that entry we were talking about. You would have been a touch higher there if you took the top of the breaker. And if we have a look at the 5 minute, same deal here. There's a breaker. This would be your breaker. This 5 minute candle here. You've got an FEG aligned with that. You get a beautiful tap in. So there's just opportunity all over the chart for London today. So I hope you took some notes there. You can always watch the video back. So let's move on now back out to the daily, and we'll jump over to oil now. See what oil has in store for us. So we did move out of this range, is what we were looking for, and we wanted to see if we could trade back into that. And you can see the price has reversed here out and still continue to respect this bearish FEG here on the daily. Now on the weekly, I'm just going to clear that off there. I'm going to keep that other box for the moment, but we can see that we've got this candle, quite a bearish wick on it. Didn't close back inside the range just yet, but let's see if the weekly respects the equilibrium of the previous week. If we close below this level here, then we're starting to look at that change in state of delivery for the weekly. And on the daily here, we can see we've had an open high. What I'd be looking for is, will price come down? That's the weekly EQ there. Is that right? Yes, off that range, off that candle body range. And it's aligned perfectly with this opposing candle. All right, so we want to check that. Is price going to respect this level? All right. So keeping an eye on that. We've got this volume imbalance here as well. Smooth edges on the daily up here. Keeping an eye on that too. For now, I'd be patient. Look for price to possibly come back up into this gap, then trade away from that, or see where price wants to go today. Moving over to gold. Here on the daily. Lovely, lovely candle closure here. How's the weekly look? So weekly, insight to order flow, candle closure, back inside the range. And yes, we had the same the previous week, but we did get that sell-off. So you could have caught shorts. Now we're looking at the same deal. We've closed back inside the range. And whilst we have swept out previous day high, we did disrespect or invalidate this bearish FEG here. We have another to draw towards here. We are currently respecting the equilibrium, or even the top 25% or the top quarter of the previous day's candle at this stage. So I do like this, the look of that, and I like the idea of price continuing higher. We do have a 4-hour gap here. And again, I wouldn't mind, even if price did want to come down into this level, before pushing higher from there. Let's move over to Dixie. And we had a daily inversion. We swept out these highs, or this high here that we had been looking at. We didn't quite make it to this high here. That was our next target based on this move here. And this inversion on the daily, I would be looking for price to continue lower. It looks like we've put in equal lows here. We do have this gap to draw into. So I would anticipate, if we respect the equilibrium of the previous day, that we will continue to move lower based on that, which would mean, being inversely correlated, that the euro and pound will likely move higher. So we swept out the lows. We wanted to see this sweep, so we got exactly what we're after. We took out these equal lows here as well, which is great to see. Now we've put in an inversion here on the daily, and what we're looking to draw to is this bearish FEG here, respecting the equilibrium of the previous day's range. Pound swept out the levels here that we were looking at. We still have this to draw up into, this bearish FEG. I've got a closure back inside the range here, and look, previous day high is the low hanging fruit. We're just fighting a little battle here in this bearish FEG right now. But I would anticipate that low hanging fruit being previous day high to at least be our target today. Heading over to crypto now. Bitcoin, we had a little move here over the weekend. I'm not overly excited though, because we are in a bearish FEG and we have swept out previous day high. So for me at the moment, I'd be leaning towards price potentially going lower, and I'd be looking at this gap to be the draw. Ethereum, probably looking at a similar scenario. We've got this bearish gap that we're in right now, and we can see here we had this change in the state of delivery. So where's our next draw? This bullish gap just here. So if we can get a move lower, that's okay. I mean, I obviously want to see higher prices, but if price wants to do this, then I'm okay with that. Where is our projections off of this? So our -2 to -2.5 is our bearish target zone. So bearish target zone. see how that plays out over the course of this week. All right, guys, thank you for tuning in today. Greatly appreciate you being here. Hope we have a fantastic week. Be sure to head over to Trade Foundry. Link is in the description. You can follow us there, hang out with us. Most mornings we stream live for the New York Open. So be sure to come over and join us there. Take care, guys. Bye for now.